Bitcoin unable to break above a higher level of interest, and now we broke below our lower level of interest. That and Elliott Wave considerations. Let's dive in and talk about it. So, as always, starting out on the larger time frame of the daily, looking at our levels, we've broken down beneath our lower level of interest at 88. We've had these numbers since kind of the beginning of this breakdown due to these pivots that we've been dealing with and looking at and watching over. Last week, we were kind of watching for either a break above to see if we can get some continuation after coming back and correcting to this level, but we've only gotten another peak up, another breach up, and then we've broken down below. In my last video, I went over what the difference between a break and a breach is, so I'd recommend go watching that. But all we've really done is breach above, sweeping up some pivots, and then finding liquidity and moving back down below. Now we've broken below our low level of interest at 88. The first thing we have to do is look at how we're reacting. Usually when we look for a breakdown, this is exactly what we're looking for a continuation in the general direction of the trend. Breaking down beneath a level and then coming back and correcting to it or moving back to that level to retest it before a move back down is a play that we can actually use to our advantage. Now, it all depends on if you're bullish or bearish, but right now the PA is suggesting that it can't get back above this level. And I'll zoom in a little bit now. So these little wicks up and shows that the level is holding pretty good at the moment. If we can find our way to break back above it, come back up to 92 potentially, and then correct back to this level of interest, I think that's the main level and the main thing that the bulls want to see. If we continue to either correct back up above in a lazy fashion and roll over back from 92, that's what the bears want to see. And that would be a deeper retracement. Right now, from top to bottom at the moment, we are hitting a most likely target for consideration of a short entry. Right now, we have the algo zone, and then we have a level of interest as well. The EW is not the most precise and the most trustworthy thing that I would say. So, using these other options is a consideration that we could look at, potentially look for a short. I think it's still early in the week. We've just come into the weekend, so I'm watching how this reacts pretty much tomorrow. Saturdays are usually pretty boring, but Sunday morning I'm going to be seeing how we enter into this area or if we're going to keep going into this area. And if we keep coming up corrective, I'm going to be looking for a short just because of this confluence of the algo and our area level of interest. I think that's enough confluence when the Elliott wave's not looking so great to consider looking for a short. Now, again, over the weekend, if we end up popping up, coming back to 92, and we can consider this little move an impulsive move up to this level, and then we get a correction back down to this level, let's say, and our other area of interest, then I'll be looking for a long. Right now, I think this isn't the best looks for bulls, but when we dive in and do a little bit of Elliott wave analysis, we'll look at the two options that I'm considering. So let's go ahead and dive in and look at that right now. On the bullish side of the Elliott wave considerations, we started off looking last week that this was possibly the potential bottom, and that we were going to move up in an motive fashion. Right now, we did get that move up that broke this high. So there is a possibility that we're dealing with some kind of motive move up in the form of a diagonal. Fortunately, I don't think this looks the best as far as on the lower time frames because we have this swift move up. You can only have impulses or zigzag or sharp corrections in the actionary waves of a diagonal. I think we have a bit of a mix here that's questionable at best. So this would be our primary consideration if we end up holding this level down at 80,000 and breaking this level up at 94,000. I think this would be how we have to consider labeling this at the moment. Now, of course, this could be some kind of bigger corrective move coming up, and then we'd have to reconsider what this is. This could be part of the deeper correction, this being the primary actionary wave, and then we have the primary reactionary wave before we get a continuation down. So that still is on the table, and because of the size of these moves and the questionable nature of how this thing printed, I think that those two considerations are founded and should be considered. But for the bullish side, again, if we're going to hold this pivot, I think that's would be the most bullish thing. This as a motive wave, I don't like it too much. Based on the PA, I think I would be leaning a little bit more bearish, to be honest. But there are some other considerations that I'm looking at that this could be the bottom and that we are moving up, at least for a little bit of a break above 94 and hopefully taking out and invalidating some of the more bearish considerations at 98K or 99K due to this pivot being taken out. So to close out the bearish side, Again, this has to be a motive wave of some sort, even if it's some kind of corrective move back up. We'd have to consider this to be some kind of motive wave, unless this is more complex. Again, the PA is questionable, so it could go a couple different ways. But if we do end up moving up, that would be how I count it at the moment. First thing I want to start out with the bear counts is the zigzag ABC here. When it comes to this kind of structure, we have two concurrent counts at once or dual counts potentially. And it all depends on the context that this structure is held within. So if we do get the break, I think that there's a possibility that this is going to be both an ABC zigzag down or a 1, 2, 3 down as well. It's both counts at once, and we can use context clues to pick out what we think it's going to be. For one slope analysis, as you see, we have more slope or a faster slope in the primary actionary wave, as I have it labeled, and then we have a slower slope here. Again, these are just clues. It's not a guarantee either way. And depending on the larger degree structure that this is part of, it all depends on where the slope lies. But in this consideration, again, I think we have both an ABC potential and a 1, 2, 3 potential as well. The good thing about these concurrent setups or these dual counts is that they both mean the same thing when this thing completes. And that's what I think is the most ideal move for me as far as clarity goes, is a sweep of this pivot, potentially ending the impulse move that I have counted out at the lesser degree. So 1, 2, 3, 4, 5. And either way, if we break this low at 80.5K, that gives us a potential for a completed impulse down. And then we can start changing our bias to look for a potential move back to the upside. Now, whether that's it and we're headed up to new time highs, or if it's just means we're headed up for a nice move up to 93K or 94K, put in the secondary wave 4 to offset this B2. I think that would be a nice move to play. That's a good $20,000 move. This is one variation of what I'm looking for. I think the slope matches this a little bit better. We are super deep compared to a most likely target for a wave C of a zigzag. And we did break the base channel a little bit, but I think if we get one more move down, we're still within range of this being an ABC zigzag structure at this degree. And then we should start changing our directional bias to the upside potentially. And how that would play out for me if we break this level or breach this level at 80K, 80.5K, and then we reclaim it in a corrective fashion, I think this is a good level. Keep an eye on and play off of and use as confluence and looking for a potential long trade setup. To build off the last bearish count with the zigzag, here's going to be the 1, 2, 3, 4, 5 impulsive move down. Again, I think it's two things at once, and we have similar points of interest down in this wave 5 area of the lesser degree of the wave 3 or the C wave. We're going to have to see how this moves down to really get an idea where we are in the count. Again, in wave 5s, we're looking for less slope than the wave 3. So right now, this is looking a lot more complex and moving a little bit more lazily down, which is what you want to see in a wave 5. And then we're looking for some divergence between the wave 5 and the wave 3 in the EWO as well. So if we do get a move down, hopefully we get something nice, clear, ideal that we can play off of and determine where the exact end of this wave C or 3 is going to be. And ideally, it's in the area of interest, and we get a lot of clues and confluence that add up to where we are in the count so that we can play with more confidence that the wave C or 3 is done at this area. We can always wait. If you want to watch my other video on what to look for the ending of a wave 5 and my video talking about what exactly I'm looking for in a wave C or 3, it all determines where the trend change comes and at which degree you want to play it. If this does end up moving down, of course, we can move deeper and deeper into the time frames and look for that fine-tuned turning point, potentially catch the pivot at the lesser degree, and hopefully it turns out to something at the higher degree that moves up for at least a correction back to 93 or 94,000. But that still has to print, and we still need to come down to 80.5K, break it at the minimum, ideally come into this area of interest in an ideal impulsive or motive fashion so that we can look for that turn to begin with, that we have the clarity to use to our advantage before we actually end up taking or looking for a long potential down in this area. So in last week's video, I was talking about the potential personality pattern that I'm seeing within Bitcoin where we have smaller wave 2s and larger degree waves 4s, and that's still playing out. But I think this is still a possibility. Again, This is fitting pretty nice. Even though we did break this, I think this does look fine as a potential complex correction in the form of a double zigzag of some sort. So I think we're still on track of this being a wave four because we have a potential for this to be a flat style correction. The offset that we'd be looking for is a sharp style correction, which is what this is giving off now. So everything, the pattern's still fitting. The pivot that we were talking about last week was taken out, but we are still within the most likely targets for a wave four, and we just swept this high, possibly taking out the liquidity before returning over and making this looks like a nice, cleaner, sharp, complex correction, in my opinion. So this is still on the table. I think the PA is still giving us clues that this could potentially head further down. We haven't come down quite yet. We're looking for a turn based off of all of our other indicators and Elliott Wave guidelines, but we still didn't turn around until we started breaking some of these other pivots. We're still holding this pivot here. So again, if we get a nice clean break, I think that would lean a little bit more towards the fact that we're going to end up breaking 80.5K and heading down into area of interest that we can take advantage of looking for a long setup to move up either for the correction at the larger degree or we're done and heading up to new time highs potentially. So the next correction or bearish consideration I'm looking at for the Elliott wave is going to be a triple zigzag. Now, when we are dealing with this correction style or the complex corrections, the third actionary wave and the second X wave is getting pretty rare. So we're diving a little bit deeper into the more unlikely counts with this being a triple zigzag. I'm going to bring up a bit of a flashbang effect. So brace yourself. I'm going to bring this up nice and slow. One thing I wanted to look at and what I usually do and typically do is compare the pattern that I'm considering with the Elliott Wave cheat sheets that we have for free in the Discord. If you want to come check it out, all you have to do is join the Discord. I think the link will take you into the Discord, and this will be right in the first area labeled where to start. So if you drop in, you can grab this right away and start comparing your PA on your charts to these different patterns. And this gives you all the rules and guidelines for the primary ones that we look for when we're looking at these patterns. Again, this being a triple zigzag, triple zigzags are rare, they do happen, but it's all on what the PA you have and if they match the rules and guidelines. So I'm using these rules and guidelines, comparing it to this price action, and it's showing me that this is a potential consideration that we should take a look at and see if we can find some confluence in the completion of this pattern and looking for a directional bias change in the completion of this pattern. Going off of all these, I've already set up this chart and what I'm looking for. I think we could still be putting in something like to this effect. Now, we also have to consider what this pattern would be correcting over on the left side. If we finished it in a mode of fashion, then we could be looking for some kind of correction like this. If we think this finished in some kind of correction pattern, then we have to consider that as well. And that helps us eliminate where we think we are in the count. But just in a bubble, I think we do have to consider this as a possibility just on the price action that we're given. And again, adding if I add all three of these onto the chart, we're starting to find some area of confluence or box of confluence down at the 75 area. Using the triple zigzag rules and guidelines in Elliott Wave, this is the first possible target, the Z wave in this pattern. Typically, we're looking for a 1 to 1, 1618, 0618 compared to the other actionary waves. So this would be the first kind of most likely target that we would be looking for if we are putting in some kind of triple zigzag to complete a corrective phase, again, depending on what we think is back over here. So that's the more rare pattern that I'm looking at, but this is on the table of considerations and possibilities at the moment. So with all those possibilities on the table, I'm going to go ahead and dive a little bit deeper and show you what I'm really looking for before I even consider taking a position in this kind of sloppy market that we're dealing with. So let's go ahead and dive into that. All right, down here on the 1 hour, notice I don't have any Elliott wave on this just because so many different counts and potential patterns can be extracted from the PA that's printed already. I don't think Elliott wave is the most ideal tool to use in the toolbox at this point to look for any trade setups. Wave fours are ugly price action, so that's something that we can contribute to this situation. But I think with Elliott wave, got to be a little bit careful with this price action because it could be so many different patterns. In my larger account, I had this as a potential motive wave or diagonal. I think that could still be going on. Diagonals are corrective looking, but they are motive. So we could be done, and maybe that's the end of the correction at this pivot low. But I think we have to take that count with a grain of salt just because some of this price action isn't really consistent with this possibility. Again, this could just be some kind of larger subwave of a larger kind of diagonal going in. A lot of possibilities, like I was saying. When we're down on the 1 hour and looking for trades, we're looking for clarity. Elliott Wave isn't giving it right now, in my opinion. So that's going to be lower on the confluent ladder. I'm going to use other methods or other tools in the toolbox to look for a potential trade setup. We are getting a little bit of a deeper retrace. So if this is some kind of diagonal up, we're coming down into an area of interest as far as the retracement goes for a typical retracement of a diagonal, which is down in here. And again, the invalidation point down at 81K at that pivot. So right now, because the Elliott wave's a little sus at the moment, I'm looking for the bears to prove it. Now, if we go deeper down, this does look like a nice swift move up as a potential impulse, but I'm looking for a little bit more evidence that the next move is going to be up. This could have came down. It came down into our typical area of interest, which is the 50. But I think ideally for me, I'd want to see a nice corrective move down back into this AOI. Getting beneath this level at 85.5 is going to be sus, and then we have the invalidation point at the beginning of this potential impulsive move up. We end up breaking this over the weekend. I'm looking for a break, not a breach. These are little breaches above the level. We were able to pop the level, but we weren't able to flip it or blast far enough away from it where it didn't become useful anymore. So I'm looking for a little bit more evidence that the bulls are starting to take over. I still think the bearish considerations are higher on the table, in my opinion. But I mean, one little candle or some price action printed could change my mind pretty quick. So right now, again, I'm looking for either a move down into here and then a pop up, or I'm looking for a break of this level that's been playing as such in the past. Hopefully, potentially in an impulsive manner in a possible wave three, and then looking for that wave four or even a deeper correction to turn this area into support before we get another move up. Those are the two bullish possibilities I'm watching for now. Again, the price action isn't super clear. We do get a breakup or a retracement down to this area of interest. I think that clears things up enough where I could start looking for a potential trade plan for a long. For the counter argument on the bear side, of course, anytime we have an impulsive move up, we always have to ask ourselves, what does this impulse belong to? Is it starting something? Is it finishing something? And that's what I'm looking at. I think one pattern that kind of pops out is a potential for a running flat. If it's running flat, typically what we're looking for is a sharp move in the opposite direction. A rejection would add confluence to that we're going to reject from this area. So that's what I'm looking for now. This would be a nice area to look for a retracement before we get a move down because we have so much confluence. And when it comes to the weekend, things can get crazy. Right now, we are bouncing out of the golden zone with this little between these two pivots. So maybe this is the point where we start heading down. But again, with the weekend being in effect, we'd have to see if this is what's going to happen. This would be the pivot break, right? So we do have a small window to invalidation, which would be this pivot up at 89.3. So right now, this could be a short consideration. And I think that would have the most confluence at this point. But again, if we go back to the larger count, all this kind of stuff, a lot of this stuff is questionable. Someone's going to dig out something and it could work out. But when trading Elliott Wave, for me, I like to wait for nice, clear, stupid looking setups that are just blatant and in your face. Having to dig something out has never worked for me. Maybe it works for some other people. But for me, I like looking for no brainer setups. But in this area, my confidence isn't very high in either direction. I still think we need some evidence as to which way this market really wants to go. And when we dive into the DXY and the ES, maybe we can find some there. But for now, these are the main two levels that we have to keep an eye on. If we're bearish, I think this is a good spot to look for a potential short just because we have a potential impulsive move up. And if this is the right count, again, we're going to be looking for a move down that would potentially take out the low. Because we don't have a clear understanding of what this is, though, I think we have to call that into question. Again, this could be some kind of sharp correction as well, where this is an X wave potentially or something to that effect. So because the PA is so ambiguous in this section, we really have to be careful. And I don't think this is really the idealistic conservative spot to be looking for a trade in either direction until we get some clarity printed in the PA. With that being said, let's go ahead and dive into the ES and DXY. So just going to take a quick look at these correlated assets, ES and then the DXY. The interesting thing I'm seeing is that the DXY is on some support and is bouncing off it, while the other three assets are at some resistance at the moment. So if ES does decide to pop up, break all-time high, proving the top callers wrong yet again, I think that'll add some confluence to the bulls and may drag BTC up with it. And then the Elliotticians are going to have to start scratching their head and figure out exactly what this is, and we'll have to lean that this is some kind of motive wave if we do get the move up potentially. So again, I think I'm waiting. We are at the end of the year, so things slow down a little bit. We could get a Santa Claus rally still. Still have a couple days where that's possible, so I'll be watching on Sunday to see if we do end up getting some kind of spike up to all-time high. I think that would be a romantic ending to 2025. If we can pop this before the end of the new year or by the end of the new year, right into 2026, start looking for a retracement because this could just be to pop the all-time high yet again before it rolls over, and then everything else will roll over. We typically like to see DXY dropping, which helps with everything else heading on up. So if DXY comes in for an internal correction and rolls back over, I think that adds more confluence to the bullish outcome as well. We can try and fit all the narratives we want on the price action, but again, we need to come back to this area on all these assets and see if we can actually break above it, not just breach above it before coming back over. So as far as the correlated assets go, as I typically say, if ES is happy, then Bitcoin is going to be at least a little bit happy, stay sideways at minimum, and won't potentially roll over to lower lows. Again, that's from past experience, and that doesn't always pan out the way one would hope. But that's one other thing I'm looking at is if ES can pop up, that'll add to the potential of BTC going up as well. Down on ETH, just real quick, again, this looks like a pretty good impulsive move up. It's stuck at 3,000. We're stuck underneath it right now. I think a conservative trade would be either that we come down to an internal retracement to this move up. I think we have a nice little pivot that we can look at as well. 2880. I think this is a good spot to look on ETH for a potential long setup as well. We do end up correcting down to it. We end up breaking above 3,000. Again, we've seen these spikes and then immediate retraces, a swift move as well. So I'd be looking for a pop of this and then a correction back down to 3,000 area before I'd be looking for a long. That's all I got for today. If you want to learn more about technical analysis, I would definitely recommend coming to Trade Devils University at tradedevils.com and checking out the free white course that we offer. If you like that, you can always check out the blue, purple, and brown belt to advance your technical skills in the markets. This is where I learned my technical analysis, so I biasly recommend it. So come and check that out. But as always, I'm just rolling with the waves as a PA prints. If you have any questions, thoughts, or a different perspective, drop a comment down below. I read them all. If you have enjoyed this kind of Elliott Wave breakdown or picked up something new, give it a like or subscribe. It really helps me out. Trade safe, trade clarity. Take it easy. Later.